what we try to do on our side is get as much of that $700 million attracted to a risk as possible. And so we have excess capacity. We can use that to try to drive the premium down, because we're not going to have a single underwriter writing, unless we're talking, risks under like $10 million or so. You typically don't have just one underwriter, right? No one underwriter is going to come in and say, oh, I'm going to insure $200 million. So you need to work with multiple underwriters, and there's roughly 35 to 40 that globally that underwrite this type of thing. And they'll each have a maximum capacity line of, anywhere, say, between 10 and 15 up to, a few of the big guys might have 50 to 75 million dollars that they can deploy. And so what you try to do is build a syndicate, if you will, right? And you get each underwriter. So while they're all working from the same policy form in terms of they have the same declarations, the same insuring agreement, the same loss definitions, what will be different is they're going to give us their own terms individually. So that means how much capacity they're willing to put up and what their rate for that capacity is going to be. So we try to create a bit of an auction, if you will, and attract as much capacity and then try to drive that to the lowest possible, so that the client at the end of the day gets the composite rate of that capacity that was offered.
It's time for another episode of the Cold Start Project. This is Jason Kanigan, the host and the founder of Cold Start Technologies. I'm here with Bob Whearty, who is with Marsh, which is a space insurance brokerage, among other things. Thanks for being here, Bob.
Oh, thanks for inviting me, Jason.
You bet. Bob and I have talked a little bit before, and we went through some information about the space insurance industry, and we both thought, wow, it would be really cool to get this out there for just anybody, members of the public and that. So we do have some confidentiality standards for data sources. So we'll be able to share general trends and indicators, but not get into specific sources and that kind of thing. So Bob, how did you get into the space insurance business? That's not something that just pops off the assembly line.
No, it's not. And so I actually come to the space insurance industry from a bit of a circuitous or convoluted background. So I'm actually, by education, I have 2 engineering degrees, both in electrical engineering, and I started my career more or less in radar engineering. So I did airborne radar for fighter jets and other tactical military assets, and eventually the same company, I was working for Hughes at the time, had a commercial satellite division, and I eventually moved over to the commercial satellite world. And it was night and day from radar, where the radar, you were dealing with exotic and leading edge technology. The satellite was more tried and true, but much more commercially focused, which I really enjoyed. I enjoyed the fact that we weren't dealing with government contracts anymore and dealing with actual clients and on an international scale. Right? A lot of the first program I actually got involved with was basically for a Japanese satellite. So I got to travel to Japan, and I thought, wow, this is a whole different world, than hold up in some secure facility working on some exotic radar program. So, I've been in the commercial satellite industry ever since. And so I did a few years of satellite payload system engineering. My engineering degrees, as I said, were electrical and concentrated in the master's in RF engineering. So knew a lot about, things like waveguides and antennas and high power transmitters and things of that nature. And eventually moved from the design side, and I had gotten involved a little bit with business development as well while I was at Hughes. But I moved into the other side, if you will, the owner-operator side. So the companies that would buy a satellite from a Hughes or a SSL or a Lockheed, and operate it for a business case. So first company I went to was called Loral Orion. And I worked with them. They were buying a satellite from Hughes and also from up the coast up in SSL, and so was part of a small team that oversaw the contractors there. And at that time, I started to lay the groundwork to get a business degree. So I ended up going back and getting an MBA. And as part of that employment with Loral Orion, I also moved back back from the West Coast to the East Coast, where I originally am from, and took a sort of a promotion, took a job doing capacity management and link budgets. So, more on the use side of the satellite rather than just, the construction and oversight of, contract management of the production. So that gave me some insight into basically, how to work with our sales guys and maximize the capacity of the satellite, to maximize the revenue, and so got some sort of practical initiation there into looking at allocating the frequency and the power and bandwidth in the most efficient manner for our clients, and also working with the folks in the ground station areas, looking at, hey, is anybody, and this actually happens, that people might be putting up rogue carriers and robbing power or bandwidth from the satellite. So you have to kind of weed all that out and figure out who's up, who's paying, who's not paying, so it's very interesting. But that company ended up being absorbed by Skynet, and so I decided to move on to a different, did not want to move up into the New Jersey area. So I took a job with Pan Amsat was actually buying some satellites at Orbital. So I moved back into the field office, contract management role, while I finished up getting my MBA in finance and international business. And once I had that and the satellites were out the door at Orbital for Pan Amsat, I moved into sales and selling satellites. I was working for Alcatel, which then became Thales, because Alcatel sold their interest in Alcatel Alenia Space to Thales, so it became Thales Alenia Space. And one day I got a call actually from a former Pan Amsat colleague who said that Marsh was looking for somebody like me because they wanted an engineer with sales experience. Mm-hmm. So I called them up, and I've been, they said, we like you, we're going to hire you. And here I am over 11 years later in the insurance world. So
very cool.
Kind of a combination of,
I love that combination of business and technical expertise. So yeah, that's not super common out there. And yes, folks, there is a company called Skynet. That wasn't a slip of the tongue. The Terminators are coming. So you're one of the first people that I successfully connected with when I really started getting into the space field, and it's not that long ago. So I really appreciate your friendliness and willingness to educate a newbie like me coming in here. And it's a different world.
It is, as I say, it's a fascinating business. It's actually, it's interesting. I've been, as I just went through, many different companies, had many different roles, and just one kind of a humorous anecdote. I was in a meeting one time with a boss. This was at a previous company, and everybody else in the room knew me. And they were all at different companies, from different companies. And as we walked out, he starts laughing and he looks at me and he says, "Can't you keep a job?" Because I had worked for so many different companies. So it is interesting. A lot of times, you work for people or with people, and you just never know where they're going to show up in the future. Mm-hmm. As I said, it's kind of a small industry and people move around a lot, and so it's one of those where you make good connections and you keep them, because you just never know how your paths are going to cross again in the future.
Right. So I would imagine few people have thought about space insurance or satellite insurance. Let's get into exactly what that means, because there are different stages of insuring a satellite. And as time has gone on, I mean, this field has been around for at least 20 years. The idea of what stages should be insured and which should kind of be left alone as tough luck if something fails in them has changed. So can you cover that for us? Give us a summary of what those stages are like.
Yeah, so you could look at it as starting in the manufacturer's facility where the satellite's being designed and built. So that would be typically covered under the property policy of the manufacturer, right? It's work in progress. And then, once it's completed, it's got to get from the factory to the launch site. Mm-hmm. So there'll be some shipment to the launch, to the launch site from the factory. And that could be, if it's a U.S. manufacturer launching from the U.S., I mean, that could be, by truck, it could be by rail, it could be by aircraft. I mean, and especially if you're going to a foreign launch facility, like let's say on an Ariane out of French Guiana, it would typically be an air freight type of shipment. And, that would be covered, again, it could either be covered under a manufacturer's policy, property policy, or there could be a transit type of policy. And then once it gets to the launch site, you don't just like strap it onto the rocket and go. There's some processing that has to take place. You'll want to check the satellite to make sure that it survived, arrived in good health. You got to fuel it, mate it, and then mount the spacecraft and put it in the fairing and get that onto the launch vehicle. So all of that's kind of known as pre-ignition or pre-launch type of cover. So there's markets that will do the transit and pre-ignition type of cover. And then typically or traditionally, at that point is either intentional ignition or launch is when the space insurance kicks in. And so we'll write our policies typically to attach at either, like I said, intentional ignition or launch. And there's a bit of a nuance there. So okay. A liquid rocket, you can send the ignition command and the rockets will start to fire up. But before you throttle up to full thrust, you might do some computer checks and things like that. And so there is a possibility to still have what they call a terminated ignition, in which case, if there's a terminated ignition, once the pad is declared safe by the range safety officer, then the risk would transfer back to the pre-ignition policy, whether it was a special transit pre-ignition or on the manufacturer property or under the manufacturer transit policy. If it's at launch, you take that all out because it's always with the pre-launch insurer or insurers right up until the actual launch occurs. And then from there forward is all the space. So you would have the launch phase could be covered. You can have post-separation of the satellite is the transfer orbit to get to its final orbit and in-orbit operations. All of that can be insured. And then typically that's done on a launch plus 1 year basis, and then you can have some annual renewal policies, which are typically done on a 1 year basis. Some markets will write longer term, where you can get launch plus N years, where N, depending on the market, could be 3, 5, or even up to 15 years. So you would get the full, and 15 is a typical lifetime for like a geostationary type satellite. So you can kind of get the gamut depending on your budget and what you're looking for. And so part of what we do is we work with the client to define what those loss parameters are going to look like in the insurance policy. So, I mean, obviously a launch failure is pretty obvious, right? Either the launch vehicle completely fails or it gets you into some orbit that's useless due to some underperformance, or maybe the separation mechanism doesn't work, things like that. But once a satellite is separated and is flying, now you could have a whole gamut of failures, right? From a complete total loss, where I don't know, solar rays don't deploy, the satellite's own propulsion system that's used to get it from where the launch vehicle lets it off to its final orbit doesn't work. A whole lot of things could go wrong. But there's also the idea of a partial loss, where maybe I lose some transponders, or whatever instrument that I'm putting up on that satellite that I'm putting up to make money or to do whatever the mission is either partially working or not working completely. So what we'll do is we'll sit down with the client ahead of time, and we develop, based on what the mission is and the satellite payload, we'll come up with some loss definitions, which typically involve some sort of equation. So that with my engineering background, that sort of aids that as well. I can really work with the underwriters who have either on staff, technical folks, or have consultants that they work with that have a technical background. So we work with them to come up with something that is reasonable for their business and their risk tolerance, and put together definitions. And we actually, so each of these policies is unique. We call them, it's bespoke, so it's a very unique policy. And then we have to go and educate the underwriters, right? So we work with the client. We get, here's what this policy is going to look like. Here's what the loss definitions look like. Here's the amount of insurance we need. And so we put a whole policy wording together. And then we go start negotiating with the underwriters to get that put in place. And so we can get into the mechanics of that a little bit later. So like I said, once that launch policy has expired, the operator may decide he wants to have an annual renewable, or he may want to insure into the future his in-orbit operations of that satellite. So that's typically going to be done, like I said, on an annual basis, and it will be subject to a health review. So as part of the underwriting information that you have to provide to the insurers, they're going to look at what's the health status of that satellite. So if you've lost redundancies, and typically you'll launch a satellite with some extra stuff, if you will, a few extra transponders, a few extra receivers, so that you can lose things and still maintain full capability, right? Because you're up there for a long time, and space is a hostile environment, and even though you're designing for operating in space, there's still lots that can go wrong. So you want to, and they're not repairable, right? As of now, nobody can go up and repair. So you carry extra equipment. So, but if you've had some issues or anomalies, and now I've consumed my spares, and to the point where maybe I have a single point failure, the underwriters will probably request or demand an exclusion for that. So in their mind, so basically on paper, they're going to make the satellite perfect, if you will, right? They're going to reinstate margins. They're going to reinstate redundancies if they're down to the point where there's no margin to a loss but the next loss, right? So for them having to pay. So the next loss, so the underwriter is always going to want to have some sort of protection. Now, if I had gotten the long-term policy, I would pay more, and while the underwriters would still need to see on an ongoing basis the updated health status, they're locked in, right? They said, all right, we're going to give you 15 years or 10 years or 5 years of cover. So during the period of that cover, they can't renegotiate the terms of it. So if a single point failure were to have developed, they could not, and then that single point failed, and there was a failure for the satellite, then they would have to pay. Whereas if there was any additional in-orbit insurance that was then procured to make up the difference for what was bought on long-term and the value of the satellite that was being insured, those guys would probably have had an exclusion. In fact, there was a very real example of this at the end of 2018, where an optical satellite had an issue. It had, at the time of renewal, it had a single point failure, and there was some long-term cover. So, but the long-term cover wasn't sufficient for the value of the satellite. So they topped up, right? They bought some additional insurance on an annual basis, but the insurance they bought on an annual basis had the exclusion for the single point failure that had developed, whereas the long-term didn't. Well, sure enough, the component that was a single point failure failed, and the guys who had written on an annual basis with the exclusion had they were not liable for any claim, but the long-term guys who had written it at launch, and could not impose such an exclusion, ended up having to pay. So that was quite something. Manufacturers may also have incentives. There might be some incentives in the contract that says either on a warranty payback basis or a holdback, where the customer says, all right, I'll pay you over the next 3, 4, even maybe over the lifetime. There might be some percentage of the contract, let's say typically no more than 10%, that's held back. And or, as I said, in a warranty payback, where the manufacturer gets the money up front, but there will be some criteria laid out in the contract that says if the satellite doesn't perform per spec or perform nominally, then there's some there's some formula in the contract that indicates how much money is going to have to be paid back to the customer. So that those can be insured as well. And then there's the liability insurance. Liability on the launch side is typically it's provided by the launch service provider, and then they just flow down to everybody in the contract chain. So there's a blanket protection. But in orbit liability, that would be up to the owner operator, the company that's putting the satellite in orbit to buy. And typically that is not procured unless it is required by a government type regulation. So if you're launching, if your satellite is registered or licensed for a nation state, and this all goes back to the outer space treaties from the late 60s and early 70s. If you're, so the nation state would be dictated to be liable. So if you're launching from a country that requires you to have in orbit liability, your satellite's registered in that country, you would tend to buy it. So, but most countries don't, and a lot of owner operators are not carrying in orbit liability insurance.
In case it crashes into somebody else. So anybody just listening to us and going, wait, what outer space treaties? I did an interview with space lawyer Christopher Johnson of the Secure World Foundation, where he covered this stuff. And nation states are liable for the actions that their members take, the individuals. So that's what he was just talking about there. Now, Bob, let's assume that somebody doesn't understand how insurance works and take a quick step back here. So there are organizations out there with lots of money and they want to make a return on their investment. And those we're calling underwriters. And they have a pool of money. If you add it all together, it changes year to year. But right now, how much is it in total, approximately?
So I would say right now, approximately on a per risk basis for launch, there's I'd say between 700 and 750 million capacity available.
Okay, so there's this amount of money, about $700 million floating around out there that they want to make a return on their investment on, and they have just for space launches and that right now. The launch failure rate for launch vehicles, which is the rocket explodes basically, taking out everything inside of it, including the satellite, is about 6%. It's been historically that for quite a long time. So this does happen, and we'll get into a case in this past year where a couple of bad incidents have happened. So the manufacturers will come to you and say, hey, can we get some help with insuring this thing? You say yes, not for the manufacturing or the transportation phase. And I've seen stuff come down river barges, right? Launch vehicles and that recently. But the moment that it's on the launch pad and is going to lift off and they've pressed that ignition button and it is actually taking off, that's when the space insurance kicks in. And so you will take those requirements that you have created, that you say it's a custom agreement, right? A custom insurance agreement that you've worked out with your client, the manufacturer, and then you take that to the underwriters and say, okay, all you folks who have $700 million in total to invest, who wants to insure this, right? And get paid a premium in the hopes that this will not explode or there won't be problems with the satellite after launch. And
So generally,
what have I missed?
Well, generally, Jason, that's correct. A few things. So the 700 is what we would say a theoretical maximum. So that would be everybody putting down their maximum line, which never happens. And if that's required, there's going to be some big premiums because they know you need all the capacity they have. So typically, I think right now the largest single of a single entity. A single satellite on a launch vehicle has been in the 400 plus range. But you could also, have dual launches like the Ariane is known to be able to launch multiple, two relatively large satellites at the same time. And, those could add up to, to in the 500 to 600 million range as well. So those tend to get pretty expensive because you're asking for people to put down very large lines. And which they'll do if they're comfortable with the launch vehicle. It's got a lot of heritage, and the satellite manufacturer is known, and again has a lot of heritage. So and then typically the client is not the manufacturer. It is the entity buying the satellite from the manufacturer. Now, we do represent manufacturers because, as I said, they could have some incentives. And while as a space insurance broker, I don't really deal with the property or transit that much.
Right.
There are other brokers within Marsh and within our competitors that work on those phases as well. So we can provide as a corporate entity, we can certainly provide a broad spectrum of risk management for the clients. Now, on the smaller side, what we're seeing, and especially in the wake of a pre-launch incident several years ago that really upended a lot of the pre-launch market, because it was the single largest loss in that market, and in the marine, because that's typically written in the marine market, single largest loss in the marine market in quite a long time, and it pretty much wiped out about 20 years of premium, because there had been an incident with a launch vehicle prior to launch. This particular vehicle is doing what they call a hot fire test. It's a short duration test to just ensure the engines work. And to save schedule, they were doing this with the customer's satellite on top of the launch vehicle. So they're out at the launch pad, and what happened was a fueling incident. They were actually fueling the rocket for this hot fire test, and something went wrong, and there was an explosion, and huge loss. And I think a lot of the underwriters in the marine market didn't fully appreciate maybe they didn't fully appreciate the risk they were taking, or fully understand the risk. But certainly it was something that caused a huge loss, and I think that that has really sent ripples through that market, and I think we're still recovering there. So what's happened is that, at least for some of the smaller risks, space markets are willing to look at maybe covering some of that transit and pre-launch work as well. So we have for some of these, what we'll call new space or small sats, a few markets coming out with like what we'll term a seamless cover, where it will pick up the transit from the manufacturer and all the pre-launch and the launch of the satellite. But the amount of capacity that's there is, right now is maybe a few tens of millions at the most, and so it's not sufficient for the big guys that are in the hundreds of millions of dollars of satellites. And and again, it's an ongoing development within the insurance world to try to react, if you will, or proactively find solutions to situations that arise where maybe markets that have traditionally underwritten a certain risk are now a little more reluctant to do so, based on some incidents that have happened.
Right. Hey, this is Jason Kanigan, the host of the Cold Star Project and the founder of Cold Star Technologies. I've decided to do something new. I've started doing daily update videos on who I met and what I learned the previous day in the space field. And it's a great sort of follow me thing. You can learn what I learn. I'm meeting a heck of a lot of people and learning a lot of things really fast. And the space field is really disparate. There are tons of nooks and crannies to go into and explore, from legal, operational, regulatory, compliance, and gosh, the end customer. Who'd have thought about that, right? So you can sign up for this. If you go to coldstartech.com/MSB, that's short for Make Space Boring, the mission we're on, then you can sign up, and in your email you will get a daily notification that the new video has been posted. I'm also thinking about doing some branded mini courses and summarizing papers as I'm able to. So those will be some goodies that are in there as well. So if you're interested in that, go to coldstartech.com/MSB and join us on the mission to make space boring. Now back to the interview. Yeah, and let's get into a couple of those incidents that happened in the last year and talk about some trends. Pareto's law is totally in effect here. A small number of launches have much of the capacity tied up in them. And when one or more of those fail, that negatively impacts the whole thing. So what has happened in the last year or so that has impacted? this
Well,
field?
we certainly have had some losses. So just, and I think to lay the groundwork for this, we should go back to your prior question about how does insurance work. And so insurance, right, is the losses of the few are absorbed by the many, right? So there's actuarial tables, and insurance companies know exactly, all right, we can predict with pretty high accuracy, what our losses are going to be for homeowners or for auto or, for things like this, property. And so, they have a good basis on which to set a premium. And, but you don't have that with space, right? You don't, there's just not sufficient numbers of launches, and there's a constant change in technology. So, it's even hard because you might advance the launch vehicle, or even heritage satellites would every once in a while you would probably inject some new technology in there, and so that would sort of reset the baseline in terms of if you were trying to do this on an actuary basis. So it's more so what we call cash flow underwriting. So about that $700 million I talked about before, the insurance companies have that, and the reason they're willing to underwrite, a space which is basically a catastrophic type loss, right? It's one, it's short tail. You have a launch event which happens in hours at the most, right, between launch and separation of the satellite, or maybe up to 1 year, right? We said launch plus 1 year. But, so it's not a super long exposure, but it's also completely uncorrelated with all their other risks, right? Whether there's tornadoes or fires or other lines of business. Space is something that's uncorrelated, so it helps in terms of managing the overall risk of their portfolio, and it brings in decent premium rates. So it's what we call a cash flow underwriting. So what we try to do on our side is get as much of that $700 million attracted to a risk as possible, and so we have excess capacity, and so we can use that to try to drive the premium down, because we're not going to have a single underwriter writing, unless we're talking risks under like $10 million or so. You typically don't have just one underwriter, right? No one underwriter is going to come in and say, oh, I'm going to insure $200 million. So you need to work with multiple underwriters, and there's roughly 35 to 40 that globally that underwrite this type of thing. And they'll each have a maximum capacity line of, anywhere, say, between 10 and 15 up to, a few of the big guys might have, 50 to 75 million dollars that they can deploy. And so, what you try to do is build a syndicate, if you will, right? And you get each underwriter. So while they're all working from the same policy form in terms of, they have the same declarations, the same insuring agreement, the same loss definitions, what will be different is they're going to give us their own terms individually. So that means, how much capacity they're willing to put up, and what their rate for that capacity is going to be. So we try to create a bit of an auction, if you will, and attract as much capacity, and then try to drive that to the lowest possible, so that the client at the end of the day gets the composite rate of that capacity that was offered. So to the extent that there's excess capacity in the market, that helps us drive the premium down. So the market kind of goes in a cycle, and it's kind of humorous, because when I joined Marsh in 2008, I was told, which was true, that the market's soft and it's in a softening cycle. Well, it took over 10 years for that cycle to start to harden, because the overall experience had been quite positive, and so even though overall premiums were dropping, the overall market premium was dropping. Losses hadn't really occurred to the point where there was some pain. But now in the last couple of years, the total market premium has dropped to the point where it is not sufficient for a single large loss. So it's, you might say, maybe not totally rationally priced. And so we did have some big losses in 2019. Starting at the end of 2018, there was a big loss, which is the one I had alluded to earlier with the satellite that had a single point failure. And we had we had a launch vehicle that had over 10 successful flights, I think 14 successful flights, and then all of a sudden on the 15th it failed. So if you're looking at that from a failure rate, you go from 0% to 7.5% on one flight, and that happened to be over $400 million loss, and so that was I think the largest single loss in the industry at that point. And then there was a additional failure on a Chinese launch. A lot of that had been insured into the what I'll call the Western, insurance, the markets that we normally deal with, the ones out of London, U.S. and continental Europe. The Chinese retained a bunch, but they also reinsured a bunch out. And then subsequent to that, there's been another failure. Don't know all the parameters behind that yet, but it looks like it could be a fairly significant loss in the maybe perhaps 200 million range. Don't know yet exactly what it's going to be, but it's in terms of percentage of that satellite loss, it's probably at a minimum of 50% loss of that particular satellite. But again, that's nothing that is known yet, right? It's just known that there's been a loss. So all of these add up to a pretty big loss. Well, I think in total, we're looking at something over 800 million if you add all these losses up, and the market premium was maybe a little over 400 in round terms. So and over the last few years, as I said, the market premium's been coming down. There's been several years in the last 3-4 years that losses have exceeded premium or have been right around what the premium is. So underwriters have reacted. One of the large well-known underwriters basically pulled out of the space market, and that took about 40 million with them. So roughly 10% of the total capacity went with them, and we'll find out in the new year coming. And then the underwriters typically renew their capacity, especially if they're not. They may have what we call managing general agents that would have capacity from various underwriters behind them, and so they would tend to renew those agreements or those treaties on an annual basis, and so we'll find out what capacity we have going forward, and then their willingness to deploy it and on what terms, because I think after the last year for sure, a lot of these guys have much more scrutiny from management. It's like, hey, what are we doing here? And because these are, as I said, it tends to be catastrophic type insurance, and so when the losses happen, they are big, and and if the overall premium is not sufficient, you're going to get somebody's attention. So does that answer your question?
Yes. So capacity will be decreasing, and rates will be going up. I think that's what we're going to see. We're going to see a bit of a contraction. Now, how big of a contraction in capacity, don't know, but certainly rates are going to go up. Just on some of the initial in-orbit placements that we've done, we're seeing rate increases of 100 to 150%. Now, that might be the initial knee jerk, and we're hoping into the new year, if things start to settle out, that will start to rationalize a little bit more. Certainly not going to go back to where it was prior to the losses of this year, but we're just hoping that the dislocation will start to settle out, and we'll get start seeing a bit more of a downward trend or a bit more of a norm, and less of this spikiness. Right. And as you pointed out with that big, was it Vega, the big launch failure, you can have a success story of a number of launches in a row and then a sudden failure. And I think you're going to have a few more successes after that will even out to that 6% failure rate that we've seen historically.
Well, now that's correct, and that was a well-known risk. It's a European rocket, so it was well-known. The satellite, although the satellite had nothing to do with the failure in this case, was a known entity. So a lot of markets were willing to place a big bet, right? They're willing to put down a decent line size and at a very aggressive rate, because it was looking at that, they're looking at that's a good play. I'm probably going to get that premium. But, in that particular instance, it didn't work out. And yeah, so, past success is no guarantee.
Mm-hmm.
As a former engineer, I like to say, because heritage is a big thing in the space industry, but there's a lot of heritage hardware that has failed. So, I remember back in my engineering days, even having some arguments or discussions with my management on, wanting to inject new technology, and they were somewhat, or not somewhat, but definitely reluctant and very resistant to do so, because they didn't want to be the first to fly, XYZ. And, I would make the argument, well, it's been, we've had a thorough test program, and it's ready to go. And, just because you're putting heritage it's not a guarantee that you're not going to fail. But, I think people like, well, they don't want to be the first. And if something's flown before and it's failed, well, at least I have a good story. I can say, well, it's flown many times. So, the space industry tends to be conservative that way. But that, and that's something that the underwriters also look at, right? They're going to look at your margin, your heritage, your test and qual program. And, but things are changing, with the smaller sats and the constellations and things like that, you just really can't, build them and test them in the same way that you did the big geosats that took, that take 2 to 3 years to actually get out the factory door. So, the industry is in a bit of flux, and, it's going to be, so, as that old saying is, may you live in interesting times. This is certainly very interesting times for the space industry, and the insurance is part of that. So, learning to adapt and adjust to the new paradigms that is being brought in by the new guys, the entrepreneurial, the Silicon Valley, startups, if you will. While at the same time, there's still the tried and true, the Intelsats, the SESs, the large, the EchoStars and DirecTVs out there. So, that, going to do things much more we're going to do things on a more traditional type basis. So you kind of got to accommodate both of them.
Now, there's no international or national legal requirement to have insurance, right? It's not like for your personal car or something like that.
No, I would liken it to, let's take auto insurance as an example. Typically, you go buy a car and you don't pay cash, you have a loan. Well, the loan is going to come with some strings, one of which is they're going to probably want insurance. They're going to want some evidence of insurance for the length of that loan. Now, once that's retired, you can decide whether or not you want to carry the first party or collision insurance. But as a function of getting a license, the state or the licensing issuing agency is probably going to require liability insurance that you need to protect in case you hurt somebody else. So that goes back to what we were talking about earlier, where most satellite operators don't. They'll get a launch license, and that launch license will require certain liability for the launch. But once it's up in orbit and operating, there's no ongoing requirement in most cases for liability insurance. So what tends to happen is the owner operators will buy asset insurance based either on their risk posture. What happens if I lose a satellite, and is insurance a good way to mitigate that risk? Or if they're kind of a startup or need to borrow a lot of money, there may be loan covenants that dictate insurance. So in those cases, what we have to do is understand what those loan covenants are and design the policy such that it is compliant with those loan covenants. But once the loan is paid off, those operators may decide not to continue to buy insurance. Their constellation or their satellites are up and running, they're generating revenue, and they're and that they'll manage whatever losses may come. And maybe if it's a constellation, maybe they have some extra satellites. Typically, constellations will have extra, such that if I lose one, I can basically have a very graceful degradation in the overall performance of the constellation. Or in a geosat, some operators decide that they have enough satellites in orbit that they can move them around a little bit if needed, and they're playing the odds that the loss of a satellite is so low that maybe their overall finance position is improved by not buying insurance, and when the occasional loss happens, that in their view, maybe they're looking at it that that the present value of that loss is still doesn't tip the scales that they should have bought some insurance. Where others have a completely different risk posture and decide they're going to buy insurance. Now maybe some buy each satellite on a what we would call a first dollar or some sort of deductible basis where each satellite's insured. Others may look at it in an aggregate and say, all right, I've got N satellites up there, so I'll absorb the first so many dollars of loss across that whole fleet, or the first N satellites that fail or whatever, and then the rest I'll transfer to I will transfer to a to the insurance market.
Okay. So unlike many other nationally and internationally regulated components and licensed and that kind of thing, requirements for these satellites, there is no insurance requirement for space. So you do need to insure to make sure your rocket doesn't take out half of a town on the way up. But once you're in space, hey, it's just free for all up there, huh? And do what you like. That's despite nation states being liable for the actions of their citizens. So very interesting. I wonder if that will change sometime in the future as more and more satellites get up there. You can't afford to be second best. You need to be first, and that requires speed. Now, if you're thinking that growth is supposed to be slow and steady, frankly, the way I was taught back in the 90s in the operations management and business administration programs, you are too slow. We have to adapt. And in space, it's no different than anywhere else. People like to think they're special in space, and it is fun, all the stuff we get to work on, but business is business. The fundamentals nowadays are conservative growth is not good. You need to run as fast as you can and risk outstripping your supply lines, which means in our world, using up the capital that we've got. That's a risk. But there is no prize for second place. There certainly is no prize for third. If you want to scale operationally fast, come talk to us at Cold Star Tech. We are the process experts for scaling fast. Now back to the interview.
Well, I think part of what's driven that historically is the orbits that satellite go to. So traditionally, the vast majority of the launches, especially for the commercial entities, the satellites were going to what we call, and I had said this earlier, a geostationary orbit. So if you look at the various orbits, when you get to 22,300 miles of altitude, and that's above the equator, the orbital period is 24 hours. So, hey, guess what? That means I pretty much stay stationary over a spot. So I can move to a certain longitude and, keep it right there above the equator, at 22,200 miles on an equatorial orbit. And, I'm fixed essentially from the person on the ground's perspective, right? If you could look up and see the satellite, it would pretty much stay fixed. Now, there's all kinds of gravitational forces, and the Earth's not a perfect sphere, and the moon's moving around, and the sun, and all. So there are tugs of force that will tend to want to move the satellite, but it's manageable. And so the satellites carry fuel for station keeping, and so they stay in a box. So they stay in a very narrow box. Let's say within half a degree or whatever. They keep them. The operator will manage so the satellite stays in that fixed, that sort of fixed box. And so there's a lot of, if you will, traffic management that's just inherent in operating at that orbit. So the idea of collisions and things of that nature, it's very remote, right? Now, with the advent of more and more satellites going into low Earth orbit, now, you've got things moving relative to the Earth, and you've got and you need a lot more satellites, right? Because if I'm out in geostationary, I can see a huge chunk of the globe, right? Maybe about a third of the globe from that altitude is visible, right? If I could stand on the satellite and look at the Earth, I'd see, maybe a third of the Earth. So, 3 or 4 satellites at geostationary, if I had a company and I wanted essentially global coverage, I could put up about 4 satellites, and I would, 3, I think, at the theoretical minimum, but let's say 4 to account for elevation limitations with your antenna at the Earth. And I could cover. Now that would be like maybe from the 70° north to 70° south. The poles wouldn't get covered, but who lives up there, right? So the vast majority of the population areas, et cetera, would be covered with relatively few satellites. Now, if you start moving down to what we call medium, known as MEO, or low Earth, LEO orbits, you obviously need a lot more satellites because now you have relative motion to the Earth. So each, if I'm a satellite operator and I want to provide some sort of global service, now I need a bunch of satellites. And now you're looking at some of these proposed constellations, and they're what we would call mega constellations. And they're right now we're talking several thousand satellites for some of these constellations. I think I've seen one where it's up to about 12,000, right? And it's just like, it seemed like it would be a traffic management nightmare. So with the advent of some of these large mega constellations, and obviously because now we're moving to lower Earth orbit, there's going to be, and there's still a lot of space out there, but still, now you have you would tend to think, wow, the probability of something going wrong is much higher. And you've also got the deorbit of those satellites. So at that altitude, the satellite will, either naturally decay over time, depending on the altitude, or once it's reached the end of its service life, I would have to deorbit it. So I basically slow it down a little bit, and it will start, interfering with the atmosphere, and the atmosphere will start slowing it down until it eventually decays. Whereas the satellites out in GEO, when they're done their service life, they deorbit them, but they don't bring them back. What they do is actually push them out to a little bit higher orbit. And so they go above the GEO arc, if you will. And then since the Earth's not a sphere, they'll tend to gravitate towards, or drift, I should say, towards the gravity wells that naturally exist. And so, but they're up and out of the way. But the lower Earth orbit ones, so now you've got a lot more of them, and they're going to be operating. A lot of these guys are probably 3 to 5 year satellites. So that means your constellation has to be replenished every 3 to 5 years. So figure if I have a 5,000 satellite constellation and I'm replenishing it every 5 years, that's on average I'm launching 1,000 a year to replenish, and it means I've got to bring 1,000 back down to the Earth, right? So even if all of them, whatever mechanism they're using for deorbiting works perfectly, you still have all this stuff coming through the atmosphere, and some of that may or may not burn up. So there's still the possibility that something could come through the atmosphere, and very low probability, but there's still going to be some probability that maybe it injures someone. So they're going to have to run through all these calculations and kind of show that they meet certain requirements. And then just the whole idea of operating these large constellations in space may require a lot more coordination of between operators and just ensuring that things don't collide. So.
Right. And for those curious about more information on that, my interview with Dr. Mariba Jha will be out by the time this interview releases. He and I talked exactly about that, Bob. I'm glad you brought up the point that, well, yeah, we can leave something in a graveyard orbit, or we can bring it down from LEO to the atmosphere and hope that it burns up, but maybe it won't burn up. We'll have something falling down to the Earth. And Mariba Jha is working on calculations for figuring out, okay, where is this stuff potentially going to land? So it is a topic being taken seriously by our academic professionals. So Bob,
and how's it going? Sorry, I was going to say the fact that the Earth is largely, the surface of the Earth is largely water helps, and not to be too macabre, but the one incident that at least I'm familiar with, where a large object came back over a relatively populated area was the space shuttle coming back back in the late 90s, and so that that left a trail of debris, and there was no damage, right? Nothing. There were no fatalities. I don't know how many, other than the astronauts, but nobody on the ground. So that's kind of the only real data point in terms of a large scale, of stuff coming back that I'm aware of. And now, but had that happened, so that was over a, maybe you could say a relatively thinly populated swath of the U.S., but still, relative to a lot of the area of the Earth, pretty densely populated. And but your point, not to take it lightly, and that it's good that we have folks looking into running calculations on that sort of thing.
Mm-hmm. Yeah, and Charles Radley is another fellow who I've interviewed who's looking at some tracking technology, putting kind of a transponder chip on board satellites to make sure that it's easy. It's not as straightforward as you would think. The folks have not figured this stuff out as cleanly as you might have thought. I guess let's paint a picture, and then I think we're going to be done.
Okay.
What does a typical contract length look like for a client of yours? How many pages is it? Is it like an auto insurance thing, or is it a 200-page binder, or what is the final product?
No, it's I'd say 10 to 20 pages, depending on the is probably kind of typical. There's insurance has standard provisions, right? So it's it's declarations, the insuring agreement, there's the conditions, there's exclusions, and then there's the definitions, right? So you can look at it as DICE plus D, right? So, but typically the order is DIDCE, right? So you start off with your declarations, where you're declaring certain things. This is like any normal insurance policy. Then you have the insuring agreement. What are the insurers agreeing to insure and pay? Then there's any specific definitions, and that's really, especially space, since we're dealing with what we call bespoke or unique policies. Mm-hmm. We don't really have an off-the-shelf. It might be the closest we might have to that is if somebody's coming and they just want to do what we'll call an LVFO, or launch vehicle flight only. In other words, we're attaching risk and intentional ignition or launch, and once a satellite is separated, the risk is terminated, right? So you're just covering the ballistic phase, if you will, the flight of the launch vehicle. So, the underwriters don't really need to know a whole lot about the satellite. They're just going to know, is there anything new or different on that launch vehicle? Is the deployment mechanism, new or different? Maybe they'll want to know, is the mission, something that the launch vehicle hasn't done before in terms of, the orbit and, what it's trying to do. But but basically very straightforward. Whereas now, if you're getting into some of the more complex satellites, you may have half a dozen of pages just for loss definitions, just to, because you have to sit down and create them. And then, once you create them in terms of the mathematical, now you've got to convert that into like insurance language. And it's got to be language that is understood by the underwriters, because if you get into a claim situation, you don't want people saying, "Oh, I didn't really understand." It's got to be very clear and concise, and we'll go and brief them and make sure everybody fully understands. So we try to, ferret out any claim difficulties, if you will, up front by writing understood and clear loss definitions. So there's a bit of an art to that as well. We'll negotiate it with the clients, and they'll typically retain legal counsel. And so, we also, as a broker, we establish good relationships with those folks who deal in space law, so that when we get into these discussions, we know the counterparty, and they know us, and we can have some good discussions. Just a little bit of humor. So just recently, I was working, with some of my colleagues. We're working on a unique space risk, and so we have a very unique policy that we're putting in place, and dealing with the client and their legal counsel, who happens to be in the DC area, so I know this person, and And she had commented on one of our calls with the client that, she's kind of amazed that, look, in 25 pages or whatever, you have all of this instead of, normally we have contracts that are hundreds and hundreds of pages. And I held my tongue. I almost said that that's the reason for that is because it's not written by lawyers. But subsequent to that phone call, I did talk with this lawyer, and I mentioned that was thinking that, and her reaction was to laugh and say, "You should have said that. I can take it." So I think it's just we try to be concise and economical in our language, but making sure that and so there's a lot of the form of, like, the exclusions are all pretty standard, right? So space insurance is typically what we would call an all-risk policy. So unless something is excluded per se, it's covered. So it's not a named peril type of policy. So there's a standard set of exclusions, which is about 10 type exclusions, like war, terrorism. There's a few things that, electromagnetic, unless it's self-inflicted, right, is or causes some damage is going to be excluded. So there's some standard exclusions like that. The conditions tend to be fairly standard from one policy to the next. There might be a few unique ones here or there, but by and large, fairly standard. And the declarations, while there's unique language, because you're up in the declarations, you're going to have the named insured, the amount of insurance, the attachment, termination of risk. There's a lot of standard, or at least template language that is used that's there. So the really unique things tend to be the insuring agreement and the definitions that will handle the partial loss situation for the particular risk. So that's sort of the meat of the policy, and where all the real creative juices tend to come in. And then so that gets and then the underwriters get to see the policy and comment on it. So, it's not like we just present them a policy and say, this is it. They'll have some feedback. And so we try to work with the various underwriters and incorporate their feedback. And a lot of times, I'll admit that is helpful. It does help clarify, or we understand, there may have been some confusion here. And so let's get that taken care of now before, we actually have the policy placed and bound, instead of, arguing about it down the road when there might be a situation for a claim. Mm-hmm. So, there's a lot of cooks, if you will, and when we finally get done, we have a really good product, and then, we go and, get that placed in the market and go from there.
All right. Did we miss anything important about space and satellite insurance?
I don't know if we missed anything important, but it is, as you can tell, it's a very relationship business, a relationship-based business, right? So the underwriters are going to want to know, they're going to want to know the technical aspects, but they also want to get to know the client, right? Who's the counterparty? Who are these guys? And it's one thing if you're dealing, like I said, with the big guys, like an SES, an Intelsat, a Lockheed or Boeing. These are well-known entities. But it's much. But even there, it's still important to maintain relationships and meet with each other so often and understand what's going on. And is there new technologies you're putting in? What are your fleet plans coming up in terms of deployment? But it's really important with the smaller startup guys as well. To get in front of the underwriters early, even long before you're looking to buy insurance. So you don't want the first time you meet some of these guys to be like, "Hey, I need some insurance from you." It's like, "Well, who are you? I've never heard of this company or that company, and what is your business case?" So it's the idea of building that sort of trust and relationship, right? You may have great technology, but who are you? What are your backgrounds? You're not just I'm speaking of the startup world. You're not just a garage band, right? You guys have been around. You know what you're doing, and you're bringing all that experience to the table. So we want to get all of that in front of the underwriter as well as the technical aspects and the business aspects of the risk.
Our topic today has been space and satellite insurance. My guest has been Bob Whearty of Marsh, which is a full service. We've talked about the range of space insurance services brokerage. And Bob, how can people get a hold of you if they're an operator or a buyer or even a manufacturer of satellites?
Well, they could call me directly. My office number is 202-263-7840, or they could send me an email. My email is robert.p.whearty, and that is spelled WHEARTY at Marsh, MARSH.com.
All right, that sounds great. Thanks for being here today, Bob.
Well, thanks for inviting me, Jason. Really enjoyed it, and appreciate, like I said, appreciate the invite.
You bet.